Hello, I'm Ron Wilson and welcome back to PD Sessions. The RBA left the cash rate on hold after recent data suggested the Australian economy was proving to be resilient amid the global slowdown. Internationally, European Central Bank President Mario Draghi pledged to do whatever it takes to save the Eurozone, while the Federal Reserve said the US economy slowed. In other news, the federal government pushed back the start dates of a number of SMSF stronger super measures, while ASIC tightened financial requirements for AFS licensees that issue over-the-counter derivatives. Victoria Papandreou has the details.
The RBA left the cash rate on hold in August for a second consecutive month after economic indicators showed the nation was weathering a global slowdown. The central bank kept interest rates at a 2.5-year low of 3.5%, following cuts of 1.25% from November through to June. The ABS reported the CPI rose 0.5% in the June quarter, compared with a rise of 0.1% in the March quarter. The most significant price rises were for medical and hospital services, rents, vegetables and furniture. ABS figures showed retail sales rose in June as consumer spending at food retailers and department stores picked up. Sales advanced 1% from a month earlier when they rose 0.8%. Meanwhile, the ABS indicated the unemployment rate increased 0.1% to 5.2% in June as employers cut back on full-time labour. Looking to Europe, Greece's 3 coalition leaders overcame political wrangling and agreed to fresh spending cuts of €11.5 billion in a bid to keep receiving international rescue funds from the European Commission, the ECB and the IMF. The spending cuts were required for Greece to qualify for its next €31.5 billion instalment of the €130 billion bailout package announced earlier this year. As part of its pledge to save the euro, the ECB said it would buy the bonds of nations having trouble accessing capital markets. ECB President Mario Draghi confirmed the central bank would buy bonds in Italy and Spain, providing they apply to Europe's bailout fund, the EFSF, for assistance and sign a memorandum of understanding committing them to reforms. The US economy experienced restrained expansion in the June to early July period, even though retail sales and manufacturing activity waned in some regions, the Federal Reserve said in its Beige Book report on national activity. US Labor Department figures showed the unemployment rate rose in July, even as payrolls climbed more than forecast, signalling the US is not generating sufficient jobs to absorb the pool of available workers. A separate report by the Institute for Supply Management showed economic activity in the manufacturing sector contracted for a second straight month. Looking to Asia, inflation in China and India slowed, boosting expectations that policymakers in the major emerging nations will do more to boost growth. China's headline CPI fell to 1.8% year-on-year in July, the 4th straight month of year-on-year easing and the lowest level since January 2010, according to China's National Bureau of Statistics. The fall of headline CPI was mainly due to a slump in food prices, which declined to a 33-month low of 2.4% year-on-year in July, from 3.8% year-on-year in June. India's inflation, as measured by the Wholesale Price Index, slowed to 7.25% in June from 7.55% the previous month. In domestic news, the federal government has pushed back the start dates for a number of SMSF-related reforms that fall under its stronger super package. Some measures will now commence from 1 July 2013 instead of the initial start date of 1 July 2012. These include legislation to provide the ATO with the power to use administrative penalties against SMSF trustees, amendment of SIS legislation to provide the ATO with the power to issue relevant persons with a direction to rectify specified contraventions within a specified reasonable time, giving the ATO power to enforce mandatory education for trustees who have contravened SIS legislation, amendment of existing tax laws by the government so that amounts illegally released early be taxed at the superannuation non-complying tax rate, and amendment of SIS legislation relating to acquisitions and disposals between related parties in SMSFs. Separately, the government will introduce penalties to deter promoters of illegal early release superannuation schemes. Minister for Financial Services and Superannuation Bill Shorten said legislation giving effect to this measure is being progressed and will commence on royal assent. In regulatory news, AFS licensees who issue over-the-counter or OTC derivatives to retail clients will be subject to stricter financial requirements under new standards set by ASIC. Under the changes, retail OTC derivatives issuers must meet a net tangible asset, or NTA, requirement, which will require them to hold NTAs the greater of $500,000 or 5% of average revenue from 31 January 2013 and $1 million or 10% of average revenue from 31 January 2014. ASIC has released consultation paper 181, Retail Trading in Commonwealth Government Securities. The regulator said CP 181 will help to implement the government's decision to facilitate retail trading of Commonwealth Government Securities, or CGS, as part of fostering a deep and liquid corporate bond market. ASIC said it's seeking feedback on specific regulatory proposals for CGS depository interests relating to extreme price movements, best execution, pre- and post-trade transparency, regulatory data for market surveillance, market operator obligations in a multi-market environment, and market participant obligations. A couple will need to spend over $55,000 a year to live a comfortable retirement and nearly $32,000 a year for a modest retirement lifestyle, according to retirement figures released by ASFA in the June quarter. These figures are up by 1% and 1.1% respectively on the June quarter 2011 figures. ASFA said a 10.6% surge in electricity prices over the year to June was to blame for the brunt of the overall increase in living costs, while a 1.5% increase in health costs over the 12 months also played a role.